This recording is going to look at the ratios in Chapter 11 of our stockholders' equity. In our demonstration lecture in class, we ended up with this stockholders' equity section of the balance sheet. So here's our stockholders' equity. Remember, we had the three categories: paid in capital, retained earnings. Those are two sources of stockholders' equity. And then we subtracted out the treasury stock, which is a contra stockholders' equity. There are three ratios that will be in the homework, and I wanted to go over those in this recording. The first one is the payout ratio. It is going to connect the dividend paid to the common shareholders with net income. So the formula is to take the common stock dividend and divide by net income. So if you recall in the problem, the common stock dividend in this demonstration problem, again, it was to the common shareholders, not the preferred shareholders, was $124,500. We also had net income in dollars of $280,000. And you can go back to the narrative of the problem and see all of that. So here was our net income. We had the 50 cents per share dividend to the common shareholders, and we calculated out how many shares were outstanding to get that $124,500. Okay, so I just take dollars divided by dollars, the dollars cancel out, and I'm left with a percentage. So of net income, 44.5% of that was distributed in the form of a dividend to the common shareholders. The second ratio is earnings per share. And by the way, we're only focusing on the common shareholder here because the common shareholders have voting rights where preferred shareholders do not. That's why all three of these ratios are really only looking at things from a common shareholder's perspective because they have voting rights and so they have a little bit more say. Okay, so that's why then we only want earnings per share for the common shareholder. So we're going to take net income and subtract out any of that that was paid out to the preferred shareholders. So we take net income, subtract the preferred stock dividend, and then we'll divide that by the average shares of common stock outstanding. So the average common stock shares outstanding. So again, we know net income is $280,000. You go back to your problem, and we had saw for the preferred stock dividend was $21,000. And again, you can go back and find that in the demonstration problem. And then average shares outstanding. And so we're just going to take the beginning, and in the demo problem, we had solved for that to be $245,000. I'll take beginning, and then we had the ending was $249,000 of shares outstanding of common stock as well. So again, just a real brief. Remember, we had this $1 million divided by 4. So we started with 250,000 shares that were issued. Of the 250,000, we said 5 were in the treasury. So we ended up with 245,000 shares outstanding, or we could at the very beginning. And then we saw for ending outstanding shares in the classroom demonstration of getting that 249. Okay, we'll add those together. So we take beginning plus ending, divide by 2 to get an average number of shares outstanding. Okay, so just extending my line. So $280,000 minus $21,000 and divide by these shares, I will get $1.05 per share. So each share of stock, so each share of common stock earned $1.05 in net income or profits this year. So earnings per share is telling us for each share of stock, or per each share of stock, what was the amount of profit or net income earned for the common shareholder. Okay, the last ratio I'm going to look at is return on equity. This is also a very narrow ratio. It's looking at profits, but only from the common shareholder's perspective, and only the owners, not the business at large. We're not looking at return. We also had a return on asset ratio that we saw in Chapter 9. That return on assets, look at the business as a whole. Here in Chapter 11, return on equity is only looking at it from the shareholder's perspective, and again, only the common shareholder's perspective. So again, we take our profits, which is net income, subtract the amount that went to the preferred shareholder, so subtract their preferred stock dividend, and then we're going to divide that by the average common stock equity. Well, the average common stock equity, let's go to our problem, would not include preferred stock. So I'm going to scratch out those preferred stock amounts, and we're left with the common stock account, the paid-in capital in excess of par for common stock, retained earnings, and then the negative treasury stock. Okay? So I'm going to factor in those four things to get my beginning common stock equity. So again, it's all the stockholders' equity, and I just cancel out that belongs to the preferred shareholders, so I'm left with these four accounts. So down here I've got beginning common stock equity, so that includes the common stock account, and the beginning amount of that was $1 million. It also included paid-in capital for common stock. The beginning amount of that was $480,000 from the prior page. Also includes retained earnings, right? Earnings belong to the owners, and in this case, the common shareholders, because they have voting rights. $688,000. I'm just pulling that from the prior page. And then not plus, mistake there, didn't I? Needs to be minus treasury stock because it's a negative stockholders' equity account, $40,000. Okay, so my beginning stockholders' equity is $2,128,000, and I don't have room for the 3 zeros. So I'm going to go down here. Beginning stockholders' equity is $2,128,000. That's the beginning common stock equity. The ending I can get from here. Here's our common stock balance. So $1,020,000. Go down to the paid-in capital accounts. The one that applies to common stock is the $490,000. And then retained earnings is this $822,500. And then we subtract out treasury stock. Notice that it was subtracted to get that ending amount above. And we will end up with $2,285,500. And I can't really get all that written there, so let me put it here. You will end up, this amount is going to be $2,285,500. $2,285,500. So I take beginning common stock equity, add the ending, divide by 2 to get an average. Okay, our numerator is the same as earnings per share, so net income of $280,000. Subtract the preferred stock dividend. Okay, and then we're going to get an ending return on equity. I'll get a percentage because this bottom is also a dollar, so dollars divided by dollars, and I'll get 11.7% return to common shareholders. So they got a return on their investment of 11.7%.